Welcome to Thoughts on the Market. I am Vishy Tirupattur, Morgan Stanley's Chief Fixed Income Strategist. On today's podcast, I'll talk about the market's response to the complex political developments in Venezuela and examine the opportunities and risks it presents to the markets. It's Monday, January 12th at 11 a.m. in New York. Despite the far-reaching geopolitical implications of last weekend's developments in Venezuela, the financial markets have been strikingly calm. Oil prices have barely budged, global equities have rallied, and the reaction in the safe haven markets, US Treasuries for example, has been fairly muted. So what explains all of this? Let's start with oil, the commodity most exposed to the situation in Venezuela. The near-term supply appears very manageable. As Morgan Stanley's chief commodity strategist Martin Ratz notes, the market entered 2026 oversupplied and inventories remain flush. That cushion explains why Brent prices have barely budged and why Martin sees prices sliding into the mid-50s in the coming months. The bigger story is medium term. The prospect of reviving Venezuela's oil industry tilts production risks higher, despite holding over 300 billion barrels, the world's largest reserves. Current output of Venezuela is just 0.8 to 1 million barrels per day, making it the smallest producer among the major reserve holders. More Venezuelan barrels hitting global markets could keep prices soft even against a backdrop of rising geopolitical tensions. For oil, the near-term price risk is low, while medium-term price risk leans bearish. Let's talk about energy stocks. In line with the expectation of our energy analysts, led by Devin McDermott, energy equities have largely responded favorably, reflecting the potential for increased oil supply and specific company opportunities. U.S. refiners stand out as poised to gain. A post-Maduro Venezuela could mean higher crude exports of the heavy sour oil that these refiners are built to process. More imported heavy crude is a clear tailwind for U.S. Gulf Coast refiners like Valero and Marathon Petroleum, potentially lowering their input costs and improving their margins. Similarly, Chevron, the only U.S. major still operating there under a sanctions waiver, is also poised to rally on the back of this. So for energy stocks, while geopolitical story is complex, the market's message is straightforward. The prospect of greater supply is good news, and some companies appear uniquely positioned to gain as Venezuela's next chapter unfolds. Nowhere has the market reaction been more dramatic than in Venezuela's own sovereign debt. As Simon Weber, Morgan Stanley's global head of sovereign credit strategy, anticipated, prices of Venezuela's defaulted bonds, both the government bonds as well as the bonds of state oil company PDVSA, soared to multi-year highs following the weekend's events. The bond complex has already rallied over 25% since the last weekend to reach an average price of about $35 thanks to the increased likelihood of a creditor-friendly transition. A clearer path for potential debt restructuring deal improves the prospects for future debt recovery. We expect further upside as the markets price higher recovery rate if Venezuela's oil production increases further. So what's the bottom line? Last week's developments in Venezuela are a major geopolitical event, but the financial market reaction reflects both the contained nature of the shock and the prospect of constructive outcomes ahead, more oil supply, creditor-friendly debt resolution, etc. Oil markets are signaling that global supply can weather the storm. Equity investors are cheering beneficiaries like refiners and seeing the broader risk backdrop as unchanged, and bond investors are selectively adding Venezuela's beaten-down debt on hopes of an eventual recovery. For now, the takeaway is that this political event has not affected markets' positive momentum. If anything, it has created pockets of opportunity and reinforced prevailing trends such as ample oil and strong credit appetite. As always, we'll keep you informed of any material changes. Thanks for listening. If you enjoy the podcast, please leave us a review wherever you listen and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.